Wall Street has best day in over a decade as stimulus nears. So they're obviously anticipating loads of money coming into the stock market, into all the businesses, because the government is going to print money and create money out of thin air and hand it to all the US corporations. What for? Who knows? It's supposedly to protect them. Either way, the stock market's gone up by 9%. S&P 500 closes over 9% higher as investors cheer Fed backstops and political progress. So this backstop, that means insurance, doesn't it? So this is what happens. You take risk, and then afterwards you get bailed out. So the Central Bank of America has bailed out the entire American corporate sector. That's what's going on. So they can take any type of risk, and then whatever happens, they're going to be bailed out. And people talk about too big to fail, blah, blah, blah. So they come up with various justifications, and they just protect them all. It's amazing. New York cases rising faster than authorities anticipated. UK to add 35,000 NHS staff to fight coronavirus. How many of them are volunteers? Goldman Sachs tells clients it's time to buy gold, and virus may infect half of the UK. Coronavirus latest, France's death toll tops 1,000. SoftBank held talks on going private with Elliott, taking them off the stock market. Elliott Associates. Sunak warns airlines they'll only receive bespoke help, and Israel relies on nosy neighbours to contain virus. I mean, what does that mean? Track down quarantine evaders through technology and tip-offs. Right, so that's a surveillance story. So it's basically saying Israel is using surveillance technology to stop the virus from spreading. But it's, really surrounding people and saying, listen, we can tell from all of your different, the data that we've got about you, we're tracking you basically, and we can see whether or not you have violated quarantine. Everyone has to stay indoors. Pandemic is an ethical challenge in so many ways, Martin Wolf. Trump starts national debate over when to reopen economy. And then non-bank lenders will bear brunt of credit crisis. So that means shadow banking. Financial risk has been pushed from banks into the shadows. But what's interesting is that the backstops have all been given to the shadow banking sector too. In fact, there is some sort of a story going around that says non-bank lenders will be looking for help, although I can't find that story here at the moment. It's there. I think it was in an email before. No, I'm not going to find it. But yeah, here are the stories that are going around. Let me type out non-bank. Let's see what comes up. Here we go. Non-bank lenders push for access to emergency state funding. Right, it's today. Lobby groups led by UK Finance warn there is likelihood of severe impact to borrowers. Are these loan sharks? UK small lenders are warning that hundreds of thousands of vulnerable customers could become mortgage prisoners if the government doesn't grant wider access to emergency funding schemes to support credit during the coronavirus. To support credit. Does that mean to increase lending or to help lenders? Non-bank specialist lenders play a key role in providing home loans to 750,000 people who cannot borrow from mainstream banks, as well as financing small businesses and providing consumer finance, such as point-of-sale credit. However, the sector has so far been excluded from state measures to support lending. You probably charge more interest, don't you? Lobby groups led by UK Finance, along with several affected firms, have written to regulators warning that without urgent government intervention, there is a high likelihood of a severe impact and a wave of bankruptcies like during the last financial crisis, according to a copy seen by the Financial Times. So you've lent the money, you're having difficulties, and you're asking for help. I love it, man. You're ripping people off, saying, oh, no one else will lend to you, so don't worry, we'll lend to you. But you're ripping them off. Blackstone owned Kensington Mortgages. Look at all this dodgy mortgage stuff, man. Last week, buy-to-let specialist LendInvest managed to complete a £285 million securitisation deal, but Chief Executive Rod Lockhart said it was unprecedented and it was an unprecedented and unusual environment. Look at that. Shocking. All right, I'll pause now.